This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 9/23/20, and this is show number 123. Well, Nick, things are more like they are now than they've ever been before. Eisenhower once said that. You know, the major indices rallied higher yesterday. Where are we now in this pullback, in this correction?
Yeah, well, we got a good pop yesterday, but today we're retreating a little bit. The market started out higher, gapped up, and you see the Dow now down 46 points. The NASDAQ, which was a big winner yesterday, is now down 92 points. That's a decline of roughly 0.8%. So we're definitely seeing, a more choppier market right now and a little bit more volatile. And like I said, we have that election risk in play, and that's going to last a little bit here. Next several weeks are going to be very, very important. But, again, patience is what's going to do it here. If you want to make money in this market, you got to really sift out where the opportunities are. And a lot of people just don't want to do that sometimes. So, again, I love this kind of action. I think it's ultimately going to set up for some real good buying opportunities. We'll see if we take out the low from Monday. If we do that, this market has a lot lower to the downside.
All right. So it all depends if we're going to take out Monday's low.
That's right. So Monday's low is a good trade, good benchmark to trade against. And again, if we take out that low in the S&P 500, then yeah, we're going to make another leg down.
All right. What's the Russell 2000 been doing the past week?
Well, today the Russell 2000 is lower by about 0.6%, but overall it's hung in there pretty well. It has pulled back like everything else. But it's hung in there pretty well. It hasn't pulled back quite as much. It's still above its 200-day moving average, which is a critical level for me. So I think traders really want to pay attention to that 200-day moving average on the Russell. That right now is at around 1459. Remember, the Russell represents small cap companies in the United States. If that breaks, that's really foretelling that, we're going to have a little bit more of a dramatic sell-off. Right now, believe it or not, the Russell's been hanging in there better than the NASDAQ has. And I haven't been able to say that for a while. So that tells me, yeah, we're probably in for a little rough patch here, but ultimately another buying opportunity.
And one question we got from Joy, a listener. She said, do you think that the Dow Jones Industrial average is going to become irrelevant and kind of ignored at some point in the future?
I don't think it is. And let me explain why. Because it still represents 30 blue chip companies. And again, there's some of the best companies in the world. The market caps in those companies are humongous, even though it's a price cap weighted index, meaning the higher the price is in a particular stock, the more weight it carries in the index. But they pick out, the 30 best companies. So I don't think it's going to become irrelevant. I think it's still useful. It's still something that I look at, although predominantly my work is done on the S&P 500.
Yeah, so the S&P 500, it's broader. Those are the 500 basically largest companies, minus Tesla, which didn't get included in there. I love that, the way the fix was in. But so the S&P is broader, and it's also price weighted, right?
That's right. It's market cap weighted. The right. Dow Jones is price weighted, and the S&P is market cap weighted. So it gives you a better balance of what's going on. But, I always tell everybody, the Dow is for the television, right? When you come home from work at night and, hard day's work, you sit down, you turn the TV on. Oh, the Dow Jones, the first thing the news will say, the Dow Jones was up 350 points. Who cares? They don't tell you what's going on in the NASDAQ, the S&P 500, or the Russell 2000. So, it's really for television. The television really likes to highlight the Dow Jones Industrial Average.
All right. So we got some earnings in on sneaker and retail apparel maker Nike, and also social justice warrior company. What's with them?
So Nike caught a big bid today. It's up over $10 right now, trading at $127 a share. And now when you think about it, Nike is a big apparel and sporting good retailer. So that's a 9% pop today for Nike. And that's helping to lift a lot of the stocks in the retail space. So you have others companies trading higher in sympathy. So you have Under Armour, Lululemon, Dick's Sporting Goods, Foot Locker. All of these stocks are doing better today due to the fact that Nike is up. Now, I always look at Nike as being its individual stock, right? Because they have all these endorsements and you have all these high-profile athletes that they use as sponsors. So again, we'll watch Nike today. I think it's going to be pretty important and pretty telling. It went up above $130 a share. It started to fade a little bit here, but this is one I would keep on the radar the next couple of days. If this does any kind of a reversal, then you got to be really careful because it could be telling of what can take place in retail. And retail, in my opinion, right now, and I'm just talking about the broader retailers, it's such a big, vast group, it's been holding up pretty well.
All right, so interesting there that actually you can see this kind of being a beneficiary of the pandemic, more people staying home, more exercise being done at home and around the home, and less need for more work-oriented clothing, more need for like sports-oriented clothing.
That's a fair point to make. And again, they had, the market, I don't really know what their numbers were, but the market is giving them a good grade today with this big pop. So we'll respect it. And again, it looks like a very, very overbought condition in the near term for Nike. So I'll be watching that stock pretty closely going forward. If that stock does show any sign of a major reversal, which it has not done, but if it does, then there are bigger problems on the table.
All right, and finally, let's look at gold and silver. The correction continues, but you think it's getting near completion?
Yeah, I think, this is what had to happen. And, I've talked about it for a while that we're going to do this zigzag type pattern down, ABC legs down. And a lot of people out there said, I'm missing the boat, I'm crazy. But like I said, you had to shake out the weak hands. And this is what takes place when you get to a parabolic move. Now we're getting to levels where I've already started to tell my members, gave my members the other night a bunch of levels for the gold mining stocks. I already did them, completed them. And now we're getting down to those levels. I got emails from my own members saying, you're crazy. It's never going to get down there. So,
right.
Here we are.
Give us a hint. Give us a hint.
Well, one of the mining stocks that I like a lot is I've always said Agnico Eagle and Newmont Mining. Agnico Eagle, well, we'll use Newmont Mining since it's probably more popular. But I told my miners, my members, this could get down to $57, and this is where I'm going to jump on board. So again, we're at 61 now. When I talked about it, it was up around 66. So now it's getting down towards those levels, and again, that's going to be a place where I start to nibble into some of these mining names.
All right, so we're looking at it. How much longer can it go on? You see, silver is down. Lost another $1 today, and it's all kind of just part of the cycle, huh?
That's right. Silver was another equity that was holding up very, very well, and you just had a lot of the retail crowd just jumping on board, thinking that it's going to go to 100 overnight. But that's not the way these things work. You have to apply patience to the market, and that's probably the biggest detriment that most people will face in this business, is that they just really are impatient. And silver pulling back nicely. I love it. Down almost 5% today on silver futures. The SLV, which is a silver ETF, down over 5%. And again, this gets down to around that $19.75, $20 level. Starts to look real attractive to me.
All right. And one thing that I found in my discussions with mining company executives, particularly gold miners from all around the world, is when gold got up to that mid-$1,900, $2,000 range, every single gold deposit in the world became economical to mine. Now, whether that's going to result in a large increase in production further on down the road, I'm not sure. And I think that demand for physical gold, according to the people I speak with, is still increasing. But that's just an interesting phenomena that the price moved so fast and their costs, because energy costs are way, way low, their costs actually went down at the same time. So producers, companies that are actually producing ore like gold and silver, are cleaning clock right now.
Yeah, and that's a really good point though. When you have a lot of spec money going into anything, it's usually towards the latter part of a run, and then you'll need a correction. But if we just go back, Kerry, and look at the charts, and I think we're on this pretty good. And we talk about late July, early August, and we said, hey, gold now has gone parabolic. Most times when you go parabolic, you're going to need to do what we call this ABC leg. And you had the quick down move in gold. And then it went really sideways for a while and built a sideways base. A lot of people will look for that to go back up, which sometimes it will. But we never completed the ABC. Got to get that final third leg down, and we're doing that now. So, we're getting there. It's working off that overbought condition. This is what has to happen. Things never change really in the market. Very rarely do you see things change, at least from my vantage point. And again, it's doing what it should do.
And I want to hear from you naysayers who've been putting all the comments up on YouTube. I want to know what you think, because you were saying, Nick, you missed the boat. You missed the boat. There's no way. You're missing the greatest rally in history. And you've been saying all along, hey, just wait. It was almost as if you knew what was coming.
Well, when you trade pattern, you just block out all the noise. I don't really follow. I don't like to listen to anybody. I don't want to hear anybody's opinion. All I want to know is what the charts are saying. And, we've talked about the parabolic moves for so long. It doesn't matter what stock it is or what commodity it is. These chart patterns are footprints of human nature. And they usually will repeat themselves over and over. And that's why it's so important to get educated on the charts.
Couldn't agree with you more, Nick. Anyways, that's it for today. Go over to Nick's site, inthemoneystocks.com. Look at his trading record. The Twitter feeds are at ITMS, at Nick Santiago 01, at Kerry Lutz. Email us kl@kerrylutz.com. Let us know what you think about this move down in precious metals. And Nick, we'll be back tomorrow, and we'll see what happens then.
Thank you.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.